Uh, Good evening, my host, sir. Can you hear me, sir?
Yeah, you're welcome, sir.
Okay, thank you. Yeah, thank you. Yeah, good evening, all. Thank you for your time. My name is Ibrahim Taiwo, and I will be joining my colleague in taking advanced taxations this night. We're praying for a good network today. Yeah, okay. The focus of this class is to highlight examinable areas in advanced taxation, knowing fully well that advanced taxation has been a kind of problem to many students now. So we have to, the reason why we are doing this is to ensure that we put the student up to speed with the requirements of the exam. So we will not go we will not be unnecessarily, we will not blab. We will ensure that we go straight to the point. I guess so that whatever we need to pass the exam, we pass it and go. So welcome on board. So currently I have 12 students, 10 now. So let us continue the class. Others will join. This is exactly 2 minutes after. Based on what we have here today, rules. I hope you know. I know they must have mentioned the class rule to you before now. You are muted on both audio and video. You just need to listen and you can write. Also, students are allowed to use the chat button, whatever you say. And you have to be attentive during the lecture because the video will also be sent so that you can listen while we are lecturing. And all questions must be attended to after lecture. So, and feel free to call us after the lecture. Thank you. So you can look at those rules, please. The most important one is that you need to put off your your video if it's on, and you need to be cordial and ensure that you listen up attentively. So I have about 5 topics here, and the topics are what taxation of what of shipping and airline businesses, tax audit and investigations, mergers and acquisitions, double taxations, and base erosion and profit shifting. Are you getting me now? Now, if you look at this content, these are 5 topics in about 21 topics in your syllabus. Are you getting me? Let's see what we can do today. Now, now I actually selected these 5 topics first so that because of their importance. I get what I'm saying. All the topics are important, but this also is very good for us to start with. So let's start with the taxation of shipping and airline businesses first. Now, when we say taxation of shipping and airline businesses, what are we meant to know here? You are meant to know what you are required us to know is how do we tax a foreign company that are into what that are into shipping, air, courier, they are into shipping, into air transportations, and also into courier companies. To Korea, carrying goods from moving goods from one country to another. Now look at it. These are foreign companies involved in the business of shipping, air transportation, and courier services. So it means that in the exam, whenever you see a questions at the frame that is all about shipping questions or transportation, air transportation questions or courier service, I get even telecommunications. I get what I'm saying. It's a foreign company, telecommunications, right? It's the way you will tax them and what are very similar. I hope I get what I'm saying now. So, and you need to note again that so far these companies are foreign companies, you will need to tax them to the extent of the profit they derive in our country. I get it because in our law, you can only tax a company that are not really domiciled in our country. I get it. They are not incorporated or registered in our country to the extent of their business transaction in our country. It means that if you have Ethiopia Airline that is operating in the world, including Nigeria, I get me. It simply means that if you want to tax that airline to if Nigerian government want to tax that airline, it will tax them to the extent of the income they derive from our territory. I hope again, knowing fully well that they're not just operating in Nigeria alone, they're operating in all other countries. It means that whatever they make from their activities in Nigeria alone will be what will be subjected to tax in Nigeria. I hope I get what I'm saying now. So it's very important for you to understand that, please. Now, let's look at it, please. Let's look at it. So, please, 1 minute, please. 1 minute. I have a concern I need to attend to. 1 minute. I'm so sorry. Sorry. 1 minute, please. So okay. Okay. Thank you. Now, let us quickly look at taxation let's say, for instance, you are given an airline in the exam. If you are given shipping also, the same way you tax them. So let's quickly look at the next 20 minutes. We are going to what? We are going to take this topic. So let's look at how do we tax an airline company. Let's say, for instance, we have Ethiopia Airline that is operating in the world, including Nigeria. We want to now see how much of his revenue, that is going to be taxed in Nigerian territory. I hope you are getting me now. So for you to determine how much will be his revenue, how much should be the tax liability of this company to Nigerian government? I get what I'm saying now. What do we need to do? We need to go through some steps. Are you getting me? So, but that steps will go along with, I will have to I have to explain it alongside with some concepts. Are you getting me now? So let us go through it. Now let's look at those concepts that you need to know if you want to determine the tax liability of that airline company to Nigerian government. The first thing you need to know is what is the global income. I hope you're getting me. The global income simply means what is the income that what the company is receiving globally, including Nigeria. I hope you're getting me now. So if it's operating, the way they operate, the airline, they move from Ethiopia now. It's possible they will load goods, aircraft, they will load goods, human being and all that from Ethiopia to Nigeria. It's possible they load from Nigeria also to US. From US, they load again towards the UK. Can you now see? So it means that they can move from one country to another. I hope you can see. So the income they derive globally from all their operations in the world, including Nigeria, is what is their global income. Now, this is the totality of the income of the company in the world, including Nigeria. Now, the next one is now the Nigerian income. Now, in the exam, when you are looking for the global income, all the income you are given in the questions, that will be your global income. They say they are able to load goods in Ethiopia to Nigeria. I guess they put that as 2 million. From Nigeria, they are able to load from Nigeria to US, maybe at 4 million. From US to UK, maybe at 3 million. You had 2 plus 3 plus 4. That is 9 million. That's their global income. It means that income derived globally, including Nigeria. Again, but if you now want to determine what is the income derived from Nigeria, because you are going to tax them to the extent of income derived in Nigeria. So the income derived in Nigeria will be the Nigerian income. This is the income derived from all the shipping or carriage, are you getting me, from Nigeria to the outside world. It means that they will tell you that the income they derive from the loading from Nigeria to outside Nigeria, either to Ethiopia or UK or US. That is the income you are going to use as your Nigerian income. I guess me. Please don't forget the examiner can say they loaded from UK, they now enroute Nigeria to US. They enroute Nigeria. It's not that they loaded it from Nigeria, so you won't include that in there. But if they make mention of the fact that the airline happened to be loaded in what in Nigeria, the goods and what and human being from Nigeria to outside Nigeria, you will take that income from that loading as what as Nigeria income. So you need to be very careful of what you are picking as your income. Now the next one is depreciation ratio. Now, when we say depreciation ratio, this is the ratio of the depreciation in the company's account to the global income. Now, if the company is preparing their accounts, all things being equal, there will be what? There will be depreciations in that account. I hope you know what depreciation is. That's when you are accounting for the what? For the gradual reduction in the value of the asset. I get what I'm saying now. Or diminution in the value of assets. You know, you need to account for it because it's part of what of expenses. I mean, from your FR. Now, that depreciation now, they will in the account of the company, there will be depreciation. We want to now get what is the depreciation ratio because this ratio is very important if you want to determine what the tax liability of that company to the Nigerian government. Now, to get that depreciation ratio, the depreciation they put in that their account for that year, just put it on the global income. You know, this is the global income, all the income derivable from all the activities in the world. Now, if you divide that depreciation by the global income multiplied by 100, what you get is what depreciation ratio. So I hope you are following the drift. The first thing is you get the global income. The second thing is what? You get the Nigerian income. The third one is what? You get the depreciation ratio, which is a proportion of the depreciation as charged in the account to what? To the global income. Whatever it gives you is the what? The depreciation ratio. That's the third one, the third thing you need to get. The third one is what? Adjusted profit ratio. Now, when we say adjusted profit ratio, what do we mean? Now, we want to look at what is the proportion of the what of the adjusted profit of the company to the global income. I hope you know when they say you are adjusting the what, you are adjusting you're adjusting the profit. It means that you are what? You want to add back all these allowable expenses. I get what I'm saying now, and less all non-taxable income. You know, if you are given a financial statement, for tax purpose, not all the expenses as put in that account will be allowed by tax authority. You know, those ones that are not allowed, but you have allowed, you have removed it to get your profit, the tax authority will add it back to your profit because it's disallowed. Example of the disallowable expenses are what? General provision for doubtful debt. I mean, non-approved pension contributions. When you have depreciations, all these items, they are what? We have a list of them anyway. All these items, we identify it. If they have been removed as an expense in the account, what do you do? You add back to the profit of the business. That will give you the adjusted profit. Now, after you have now done that you have now completed the adjusted profit now. What do you now need to do? You will divide the adjusted profit by the what? By the global income. I guess what I'm saying. You know how to get your global income in the first instance. You divide the adjusted profit by that global income, multiply by 100. What you get is what is the adjusted profit ratio. Now, look at the trend. I said determine the global income, determine the Nigerian income, determine the depreciation ratio, which is depreciation over global income times 100 over 1. Determine the adjusted profit ratio, which is, I'm sorry, I have an issue with this system. Sorry, come here. 1 minute. Mm-hmm. 1 minute. Yes, coming. So, let's pray I don't have this issue. I'm trying to resolve. Now, look at it. So, as I was saying, we are actually taking those things one by one. So we now got the adjusted profit ratio. This is the ratio of the adjusted profit to the global income. Just divide the adjusted profit of the company by the global income. You get the adjusted. So can you see we are having two ratios now. The first ratio is what? Is depreciation ratio. The second ratio is adjusted profit ratio. These are the basic two ratios that you need to compute the tax liability of the company to Nigerian government. Now, how do we use those ratios and how do we determine the tax liability of this company to Nigerian government? Let us look at it. Now, format of determination of tax liabilities of the company to Nigerian government. So how do you determine the tax liability now? To determine the tax liability, what you get is what? You want to get the total profit that they make in Nigeria. I get what I'm saying now. Because they are operating worldwide. How much profit can we ascribe from that profit they make globally that are what? That can relate to what their operation in Nigeria. Because if I can get that profit, then I'll just what? I'll just use our tax rate on that profit. I hope I get what I'm saying now. Nigerian rate on that profit. Now, how do you get the profit now? The first thing is that you first get what is even the Nigerian profit now. Now, that's the profit they make in Nigeria. Now, to get the Nigerian profit now, Nigerian profit will now be the adjusted profit ratio you got initially. We got the adjusted profit ratio the other time. You now multiply it by what? By the Nigerian income. I told you what we mean by Nigerian income the other time. That's the income from all their loadings in Nigeria to the outside world. If those incomes are into, just identify those income in that information you are given. Add them together. These are Nigerian income. So if you get that Nigerian income, then multiply it by what? By the adjusted profit ratio. I hope you remember the way I got my adjusted profit ratio the other time. I said adjusted profit ratio is adjusted profits over global income times 100/1. That's what I got then. I now multiply it by Nigerian income. What I get is what? Nigerian profit. You can see that's how I got Nigerian profit. Now, after getting Nigerian profit, then I will now get what? The capital allowance. Obviously, you know that I must pay capital allowance. Now, let's capital allowance now. Now, capital allowance and allowance in lieu of depreciation. The tax authority will not understand what we mean by depreciation. They don't understand it. So accountants understand that because that's what they use in accounting for the diminution in the value of the asset. They account it as an expense. But because of the policy change or disparity in policies between or among companies, which will lead to different depreciation computed. Therefore, the tax authority is always saying that, okay, if because of the policy difference, one can use a reducing balance, the other one can use what? Straight line method. Why can't we disregard that depreciation? I guess now, if you have removed it as an expense, we'll add it back, then we'll now less what we call capital allowance. And when we say capital allowance simply means allowance in lieu of what? Of depreciation. So far you have added depreciation back to the profit, then there must be something you have to remove. That is the capital allowance. And that capital allowance is constant for all companies. I get it now. Part of what you are going to do here is also how to compute capital allowance, which my colleague will surely do justice to it. Therefore, I just have to lay that background so that you can understand those concepts now. Yeah. Now for the Nigerian profits, just say adjusted profit ratio that is Nigerian income. But the capital allowance aspect of it now, we now say the depreciation ratio we got the other time. That's when we say depreciation over the global income times 100/1. You still remember? That depreciation ratio now you now multiply again by the Nigerian income. Can you now see those two ratios now are what we are using to multiply Nigerian income? The first ratio, which is the adjusted profit ratio, you multiply by Nigerian income, you get the value. The next one is the depreciation ratio. I'm having a mistake with the now, which is multiply the depreciation ratio by the Nigerian income to get the what? The capital allowance. If you now remove the capital allowance from this Nigerian profit, what do you get? You get the total profit. And the total profit is what they are going to tax you on. I hope I get what I'm saying now. I mean, that's what they are going to tax that company on. I mean, that's what will make them to be liable to the Nigerian government. So in this instance now, we now see the company income tax is now 30% of this profit. 30% of the profit, but Nigerian tax rate is 30%. You get this. Now, education tax is 2% of the profit. Again, education tax. So it means that this is a company income tax. Now, if you are getting your education tax will now be based on what? On this profit before you remove this capital allowance. I hope you get what I'm saying now. So that's obviously this Nigerian profit is more of accessible profit. It means that 2% should go on this profit. I guess, but the 30% company income tax will go on on this total profit. Now, you also need to know that there is a minimum tax provisions Minimum tax in the sense that the amount of tax liabilities of the company must not be lower than 2% of the Nigerian income. What do I mean by this? It simply means that if the 30% you computed here, if it is 1 million naira, let's assume the 30% of the what of the total profit is 1 million, it means that you are liable to 1 million naira to Nigerian government, right? But if they now go and compute, if you now compute 2% of total income derivable in Nigeria, that's for all the loadings from Nigeria to the outside world, if you add all the income together, 2% of it, if that 2%, let's assume is 1.2 million. I hope I get what I'm saying. You know, the company income tax happens to be 1 million assumed, but the 2% of the Nigerian income now is now what? One of the Nigerian income is now 1.2 million. So which one is higher between 1.2 million and 1 million? That's 1.2 million. It means that the amount of tax, I guess what I'm saying now, must not be lower than these 2% of Nigerian income. It means that the tax liability of that company should be what? In that instance, should be 1.2 million. I guess because the tax as computed, which is 30%, is lower than what? Than the 2% of Nigerian income. And you must not pay lower than 2% of Nigerian income as what as tax in tax. So that is what that is minimum tax. So this is the procedures of doing it. Hope I get what I'm saying here, of what of computing the tax liability. Though there are some variations which I will explain, but let us just continue. Now look at this. The note I put here, they said note the following. One, the higher of tax as computed and the minimum tax of 2% of Nigerian income shall be payable to Nigerian authority. I've explained that the higher of the 30% you computed and the 2% of what? 2% of the Nigerian income. The higher of the two is what you pay in tax to Nigerian government. Also, the two ratios, you know, the two ratios we computed the other time, which happens to be adjusted profit ratio and what and depreciation ratio must be certified. This is supposed to be certified by Nigerian tax authority as okay. It means that those two ratios now must be acceptable by Nigerian government. I get what I'm saying now, because those two ratios are based on their global profit. I get what I'm saying now. So if Nigerian government is not cool with that ratio, what would they do? They will use their discretion to tax that company to Nigerian government. They will look at what is his revenue in Nigerian territory. They will now apply a fair percentage on it. They will use their discretion. It will be subjective if they are not cool with that two ratio. I get what I'm saying. So if you look at your question, they will state it there that the Nigerian tax authority are in tune with that foreign company. I get what I'm saying. With that foreign company regarding the two ratios, they will certify that two ratios. But if they refuse to certify the two ratios, I guess, or they believe that there is manipulations of that two ratios, what will they do? What they do is that they will use a fair percentage of what the company makes in Nigerian territory. And that's what they will tax them on. It's now left for that company to now argue otherwise. I guess what I'm saying now. But that will now be subject to discussion and so on. But they have to certify that two ratio. Look at the other statement I made there. It said, if the tax authority are not satisfied with the ratios, the profits deemed to be derived from Nigeria may be computed on a fair percentage. That's if the two ratios are not good, they're not okay with it, they will apply a fair percentage on the full sum receivable in respect of their carriage of passengers, etc., shipped or loaded in Nigeria. That's all the activities in Nigeria to outside world. They will just apply a fair percentage on it, and they will use their discretion. Now, when this occurs, the company has within 6 years to claim that its liabilities be computed on the basis of the ratios referred to above. It means that if peradventure the tax authority in Nigeria are not happy or are not comfortable with that two ratios, and they apply their own a fair percentage. Now, that particular company in question, they have 6 years to prove that the company should be the tax liability should be recomputed on those ratios. You need to tell us that okay, you are okay with that, what you have done, you have not made a mistake, and so on and so forth. You have 6 years to do that. I hope I can say anything else. The fair percentage will be the percentage you will use. That is all you need to know. That's more of what you need to know, that airline, shipping, telecommunication, and so on. Now, Now, in the past 13 diet, I think I've seen it like three times. Yeah. In the past 13 diet, and it happened to be a sheep question. It's always on number six, number seven, number six, number seven questions. I get what I'm saying now. But there is a particular diet in 2000 and, is it 2016 or thereabout that they now brought a question on this airline, telecommunication, and so on. And the question they brought out is, I have the questions, okay? Okay, Mr. Henry, uh, okay, specialized business, please. Is, I mean, the grand topic today is specialized business. I hope you can get what I'm saying now. Specialized business. In your topic, if you look at your park, you have a specialized business there. And one of the specialized business is what? Is airline, taxation of airline business. I hope you get what I'm saying. One of the one of the specialized business is what? Is taxation of airline business. I hope you're getting what I'm saying now. So, but they are independent topic. Under the specialized business, we have insurance and airline. I get me. One of it is what we are discussing now. I guess I hope you're okay with that, Mr. Henry, regarding your questions. So the grand topic is what is specialized business, and one of the subtopic under it is what taxation of what uh, yeah, of airline. Yeah. Okay. So let's continue. Thank you. Now, let's look at it. I was trying to, because before answering Mr. Henry, I was trying to explain that there was this particular diet that did not ask a question on telecom. I get what I'm saying. A foreign company that are into telecom. Now the way they now put it there, look at the way they put it there. The question why? Oh, okay. My voice is faint. Okay, okay, okay. Let me increase. Let me say. Oh, and I'm on IP, the high speech. Okay. Oh, okay. Ruda Chuku. Okay. Can you hear me now? Can you hear my voice now? Yeah, if you can hear me very well now, let me know. I'm already increasing my voice now. Okay. Oh, let me know so that the essence is that we should be able to get this. Oh, thank you. Okay, so I'll maintain this voice. Thank you. Now, as I was explaining, I said there was a particular question they brought in 2016 or thereabout. Now on telecom. Now that question they brought on that telecom, the way they said the question, they now said uh, um, uh, they put that the income, they express it in minutes. They said calls made from Nigeria to US, calls made from US to UK, calls from UK to Nigeria. I get what I'm saying now. They now say from US to UK is 20,000 minutes. From UK to US, 30,000 minutes. From Nigeria to US, 10,000 minutes. They now put it there like that. I hope you get what I'm saying now. Now, after that, now they now give all that other information. They now told us in that question that for every minute, they told us how much is the rate they charge per minute. I hope you get what I'm saying now. So it simply means that the way they even put it, they said how much are they charging per hour. Okay, I'm saying, but they express those information in minutes. So it's common sense for you to know that all what they put in minutes, express it in hour. How many minutes make 1 hour? That's 60 minutes make 1 hour. So if they say 10,000 minutes, convert 10,000 minutes to what? To hour. I get what I'm saying. Now, whenever you now get the hour, you now multiply the hour by how much they charge per hour. That will be the value of that course. I hope you get what I'm saying now. So I will still make a reference to it for you so that you can go and we can go and check that question. But procedure of taxing that company is the same procedure I just explained. Global income, 1, 2, you get the Nigeria income. 3, you get the what? The adjusted profit ratio. You get the what? The depreciation ratio. Then you get the what? The total profit of the company. Then from there you want to go ahead and compute the tax liability of the company. So that is that for that. So we are under specialized business, and one of the topic under specialized business is what? Is this. So let us now look at the illustration. This illustration happens to be a past question. All the questions we are using today I mean, they are all I can pass questions. They are within the last 13 diet. I hope I get what I'm saying now. So these are why I'm using it is that so that you can see the mindset of the examiner, and we don't want to use any textbook questions for you. So we want to see how they set it so that when you now see the question in the exam, you'll be able to attend to it. So let's go by that format I gave. Let's use it to look at these past questions. I get to me. I hope you guys are. If you are with me, let's one or two students say "I" to me. If you are with me, let me hear "I." I mean, just put "I" on the words on the chat platform. If you are with me on this, "I." Okay. Oh, wow. I have more than wow. Thank you so much, Victoria, Nwafo, Rhoda, Onye, Yusuf, Oliver, okay, Shuku. Thank you so much. Wow, we are going to pass this exam by God's grace. We are not going to fail it by God's grace. So we are going to pass by God's grace. So let's continue, please. Now let's look at this past question. They said Chief. Now in this past question, they said Chief Boni Shizaram is the chairman CEO of Shizaram Group of Companies. The conglomerate operates in several states of Nigeria. Now it means that conglomerate operates in several states of Nigeria. Now the group's areas of business interest spans across supply of building materials, transport and banking. Now they know that that's what they are specialized in building materials, in transport and in banking. Now they say in 2012. At the instance of the chairman, the group decided to diversify its business into some African countries. They now diversified their business into some African countries by floating Obi Airlines Limited, which was incorporated in Ethiopia. It's a foreign company. It was incorporated in where? In Ethiopia. They are trying to diversify their source of income or their business, and they now incorporated it in Ethiopia. Now, so far they incorporated in Ethiopia, they now say, on May 25, 2016, as Chief Shizaram was in the executive lounge of Murtala Mohammed Airport, Lagos, awaiting departure, he met his longtime friend and business colleague, Chief Roger McKinsey, who is also an entrepreneur. Now, they're just giving us a background in this question of how the what? He met his friend. Now, on May 25, 2016, as Chief Shizaram was in the executive lounge, he met his friend McKinsey, who is also an entrepreneur. Now, during their discussion, Chief McKinsey wanted to know how beneficial it would be to him should he decide to invest in Ethiopia. His area of concerns are mainly company income tax and tertiary education tax payable in Nigeria. A company incorporated in what? In Ethiopia, but what? But look, you are not looking at what will be the tax implication of that, the activities in Nigeria. I hope you are getting what I'm saying now. So concern are mainly companies' income tax and tertiary education tax payable in Nigeria, assuming he decided to start an airline business in Ethiopia. Now, look at it. Meanwhile, the financial results of Obi Airlines Limited for the year ended 31st December 2015 as below. They now give us a financial result of Obi Limited. I guess for the period. Now, look at that financial results for this past question. It said, meanwhile, the financial results of Obi Airlines Limited for the year ended 31st December 2015 as follows, as below. Income from passenger, you need to be very, very careful in picking this, because if you not get the one that relates to Nigerian transactions very well, it will distort all the competitions, and that will be what? That means that person will lose the mark. So you have to note it, that at this point, if you want to know how much is the Nigerian income, that must be what? All the income they make in what? From all their loadings in what? In Nigeria to outside Nigeria. I hope you are getting what I'm saying now. So let us look at it. Income from passenger on other passenger flights on other routes. It is not a Nigerian income. It is not being mentioned in Nigeria. Income from cargo loaded into aircraft on other routes. It is still not Nigerian income. That's 218,280,000. Now, income from passenger flight from Nigeria. That means that they loaded from Nigeria to outside Nigeria. Unlike the other two that I made mention of, it means that this third one now, which happens to be 54,401,275, is what will be termed what? Nigerian income. Income from cargo loaded into aircraft from Nigeria also is a Nigerian income. So in this instance here now, these first two are non-Nigerian income, but the last two are what? Are Nigerian income, and the last two are what? Income from passenger flight from Nigeria, which is 54,401,275, while income from cargo loaded into aircraft from where? Nigeria, 49,938,180. I guess me. That's what it means. That the addition of these two now are Nigerian income, but the global income is all the income they make in the world, including the Nigeria, which is what? 536,288,205. These are 536,288,205. Can you see how I was able to separate Nigerian income from what? From global income. The global income is all this income, both the one in Nigeria and the one outside, one that is not Nigerian one, 536,288,205. But the Nigerian one is what? 4 million and 49 million. Now, that's their what? Their financial statement. Now, they now put it to us. Other information regarding the financial statement is this. Now, look at it. They now say, from that income, they now say you deduct what? Look at their expenses they deducted. They said depreciation, 1,974,125. Staff salary, 14,373,968. General provisions, 215,150. Other expenses is 579,913. When they added all this together, it's 17,143,056. They remove it from that income, from that total global income. Now, this was the global income the other time. Global income, right? 536,288,205. If we remove it from that value, what do we have? We have net profit is 519,145,149. I get what I'm saying now. So please note it. Now, after getting that net profit as per the account, it now give us additional information. Look at additional information included the following. 1, capital allowance were agreed with the relevant tax authority at 110% of depreciation charged. Can you now see they are already debited from the ratios that we computed? So you need to go by the drift of the question. You know, in my question, I say you can put adjusted profit ratio and you can put depreciation ratio. It is the depreciation ratio you use to get the capital allowance. Now, in this question, in this diet now, they are now changing that scenario now that I created initially, because they said in their capital allowance computation, they said the capital allowance were agreed with the relevant authority at how much percentage? 110% of depreciation charged. So if I know what the depreciation they charge, if I find 110% of that depreciation, that would be the capital allowance. As simple as that. So you don't need to find your depreciation ratio, your depreciation of our global income and other over one that we did the other time. No, you don't need to find that, because they have specifically explained to you that if you are finding your capital allowance, it will be 110% of your depreciation. Your concern is that you just need to go and get that depreciation out and compute it 110% of it. Whatever you get is your capital allowance. They now said 2, other expenses include disallowable expenses of what? 425,000. Is it in these other expenses of 579,913? He said the one that had disallowable there are what? 425,000. So what does that mean? It means that it is that 425,000 I'm going to add back to the profits, because that's the one that is what? Is disallowable. I hope I get what I'm saying now. So please notice. He now said, as the tax consultant, you are required to prepare computations showing a total profit of OB Airlines Limited for Nigerian tax purpose. What's their total profit? That's the profit in which they will place 30% on. 2, company income tax liability for the relevant year of what? Assessment. What's the company income tax liability? That's 30% of the total profit. It means that if you want to get the B now, it will be 30% of what? Of what you got in A. 3, tertiary education tax liability. Now, if you say tertiary education tax liability, you also need to compute. Now, please note, what I observed lately from what I experienced in class and so on, Now, I observe that the students, when they are answering questions, know that sometimes the question is so serious, it's so difficult, but in the presentation in the exam, some of them are not so patient to know what to do in the course of presentation. They just know the topic, they know what to do, but they don't know how to present. If I were to be, you pay attention for this exam. Remember, if you get to exam, just remember this class. That says you should calm down when you get to advanced taxation. Go and check the requirements and submit your answer based on what? On the requirement of the question. If the requirements are 5, your answer must be in 5 parts. Don't lump them. If you lump them, you lose mark. If you look at this now, the answer are in 3 parts. The first thing is I first go and determine the what? The total profit. If you compute the total profit, don't quickly go and put 30% of total profit. Just compute it and say this is the total profit. Then you now go to B. You now say B. Tax liability, company income tax liability. You now say 30% of total profit. You now put it there again. You put the answer there. That's B. You now go to C again. Now say number C. 2% of the assessable profit again. You put it there. That is the way to do advanced tax. If they say advice, you must advise. You don't just submit answer. If they say advice, put the advice. Write a report, put a report. What's the opinion? Put opinion. Don't just compute. They're not just interested in just only computation. But that was the mistake that most of the students made the last time. Because I saw the last exam was not so serious. It was always number 1 that was just put stubborn, fine. But they put PPT there, they put the company income tax there, they put this question that you guys can at least do, even if you don't touch number 1 very well, if you don't do it well, but you can still do other ones and the 3 and get your 50 marks and go. So please comply, please. It's very important. Now, let us now look at the way to go about it now. Now, to compute our total profit for 2016 assessment year, how do we our global income? Now, what's our global income first? The addition of all the income is our global income. They give it to us ordinarily. If you check it, I know you have the material with you. The total income, both from Nigeria or outside Nigeria, is 536 million. So is it 205. Income from passengers flight from Nigeria and income from cargo loaded into aircraft from Nigeria. I told you, the last 2 items are Nigerian income. Now, if that is, you should add up the last 2 items, 445. I get what I'm saying now. So that simply means that I've been able to get the first 2 in my order. The global income, I've gotten it. This is it. The Nigeria income, I've gotten it. This is it. 104. Now the next thing I need to now do is to now go and get my adjusted profit. I guess you remember that we need to get our adjusted profit now, sure? Now to get my adjusted profit now, what do you need to do? Now, you now see, what's the net profit as per the account? They gave us the net profit in the account. Check the net profit. Just go and pick the net profit. Let me see if I can see the net profit again. Look at the net profit. It was what? 519,145,149. First, pick the net profit first. 519,145. Look at the net profit. You now say add disallowable expenses. Those expenses are not allowable by the tax authority. One of it is what? Number 1 is depreciation in the exam. Don't forget, number 1 is depreciation. So they gave us depreciation in the question, add it back to the profit. This is the general provision. I hope you know in the question, all your questions, either company income tax or legislation, all these capital gains tax, all this debt is what is not an allowable expense. I guess the only one that is allowable is specific provisions. General provision is like you are saying that you are providing for 10% of the total debt to be your provisions for debt that you not receive. Now, if you say 10% of if the total debt is 100 billion, will you say 10% of 100 billion? How are we sure? how much is it exactly? That's why they say general. But if it is specific, they will say the provision we make is just 100,000 is what we call general provision. And whenever you see it in exam, disallow it. It's very important. Either company, income tax, PPT, whatever, disallow general provision for that to that. Now, other expenses, they say part of the other expenses are disallowable, which happen to be 425,000. Now, these are now the identified disallowable expense. Now, so far, these are the identified disallowable expense: depreciation, general provisions, and other expenses. If you add it together, it gives us 2,614,175. That's what you add back to your profit. I get what I'm saying now. So you add it back to your profit. So that will give us our adjusted profit. I can also call it a stable profit. Now, our adjusted profit now, after we have added back the disallowable expenses, we got our adjusted profit of 521,759. Now, to now get the total profit that is now liable to tax in Nigeria, based on the steps I gave you, I would have computed my adjusted profit ratio and my depreciation ratio. Is it not? Now, in this instance, I will compute the adjusted profit ratio. The only thing I will not compute is what is a depreciation ratio, because they give us something else to do that. Now, to get my adjusted profit ratio now, I want to determine the total profit that is liable to tax in Nigeria. We now say the adjusted or accessible profit ratio now, the adjusted profit ratio, which we would have computed, is 97.29%. You want to ask, how do you get 97.29% adjusted profit ratio? What do you do? You divide your adjusted profit by the global income, 59,324. You now divide it by global income. What's global income? 536 to 88,205. If you divide it, you have 97%. So if you look at it, I think I had the computation of it somewhere here. The computation of it was somewhere. The computation of it was somewhere. I have it somewhere here. Now, okay, look at it. The adjusted profit ratio is what? Global adjusted profit over global income, 1000 over 1. What's global adjusted profit? We have it to be what? 500 and it's not 536 over this. It should be 521 over 536, because that was a typo error, please. Now, the global adjusted profit was what? 521,759. Let's check it again. Global adjusted profit is 521,759. Sorry for that. You can see 521,759, right? That's what you place over global income of 536,288. So they made a mistake there, please. Sorry, pardon me for that. It means that if you are finding the global adjusted profit ratio now it should be 521,759 over 536,288. Sorry, you changed the diagram. You changed it to this. This is 521. You can change it in your paper with you in the printout. 521,759 is the global adjusted profit over global income of 536,288. 204 times 100 over 1. That's giving you what? 97.29%. That is your global adjusted profit ratio. Now, after getting that ratio, I will multiply it by Nigerian income. You still remember? I've gotten the 97.29% as that ratio. I multiply it by Nigerian income. I hope you know that our Nigerian income will happen to be 104,339,455. The addition of all the income they derive from Nigeria, 54 and 49 million. So if you multiply that by 97.29% global adjusted profit ratio, you get the what? You get the profits. Yeah, I get what I'm saying now. That's adjusted profit now, or you can call it accessible profit. Then, what do you now do after that accessible profit or adjusted profit? You now less your capital allowance. After assuming the examiner did not make mention of the way you compute your capital allowance, how would you have computed it? You would have said the depreciation over the global income times 100 over 1. That would have been your depreciation ratio. You just come and multiply that depreciation ratio by what? By the what? By the Nigerian income. That's what you should have done, assuming they are silent. But in this instance, in this particular diet, they said the capital allowance must be 110%. Must be 110% of what? Of the depreciations. I hope you're getting me. And you know that our depreciation in the question was 1974125. Is it not? Therefore, so far is 1974125. You just multiply by what? 110%. Whatever you get is now your capital allowance, which is 2,000,000, which is 2,171,538. Okay. Oh, the material. Okay, that's Mr. Israel. I already sent the material by 3 p.m. today or 2 p.m. On the group. They have a WhatsApp group that they must have logged your number to. I guess what I'm saying. So I said we will send it earlier. So you pick it from there and print it out. I get what I'm saying. If you go and check the group, unless you are not on that group, you will see the materials there. The material I'm using today out there. I get it now. So you can print it out tomorrow. Thank you, Mr. Henry. Now you now say less capital what? Capital allowances. You have computed it to be 110% of the depreciation. And depreciation happens to be 1,974,125. If you multiply that by 110%, what you get is the capital allowance. Remove the capital allowance from that accessible profit or adjusted profit, you get the total profit. That happens to be the number one question, number 1A. I mean, the A questions, right? Okay, please, you can shout, please. You can shout me. Let me see what you're asking, please. So if you look at it, this is now the total profit now. I hope you get what I'm saying now. Now, so far as the total profit, so that will be taxable in Nigeria. So leave the answer like that. You now go to the next question. Now, the next question they said number 2. The second question is computation of company. This should be number second question. Computation of company income tax liability for 2016 assessment year. Now, if you are computing the company income tax liability, it should be 30% of that profit you made. I guess what I'm saying. 30% of what? Of the profit you made. You thought the depreciation ratio is supposed to be multiplied by net income, global Nigerian income, abi? No, the examiner already stated it there that you should not do that. Normally, that's what you should do if the examiner did not give another information to that effect. I hope you get what I'm saying now. So if you look at it, they put it in the question that 110% of the depreciation. Go and check the question. It's there. It will be your capital allowance. Go by that instruction. But if the examiner is silent, do not say that. What do? You just compute the depreciation ratio, and you multiply what you get by the Nigerian income. But in this instance, they did not say you should use Nigerian income. Just use your depreciation, the depreciation. Just multiply by 110%. That is what will be your capital allowance. Just follow the examiner instructions. Now, therefore, what's now the company income tax now? Company income tax will now be what? 30% of what? Of total profit. You know, we are going to total profit of 30% of it is this 29,802,095.40. Why the minimum tax is what? Will be 2% of the what? Of the profit before they remove the what? Before they remove the capital allowance. That should be it. 2% of the profit before they remove the what? The capital allowance. Let's look at this. What's the profit before they remove the capital allowance? Come in. Now, it should be 2%. before they remove the capital allowance, that should be 101511. That happened to be a typo error. I'm sorry, please. Sorry. So that should be 2% of 101. It should not be 10104. I hope I get. Oh, sorry. I was talking about minimum tax. Sorry. I thought I was already talking about the education tax. I'm sorry. So the minimum tax is 2% of your what? Nigerian income. I hope you still remember when I explained to you. I said when you are computing your minimum tax tax is 2% of what income you made in Nigeria. I hope you're getting me. You look at it. This is Nigerian income, 104,339,455, right? You now compute 2% of it. 2% of it, what is it giving us? It gives us 2% of this value, 104,399,455. We give us 2,086,789. Now, you will now go and compare that tax liability of the company, which happens to be what company income tax, which happens to be 29,802,095.40. You now compare with the minimum tax, which is 2% of the Nigerian income. Can you see 2% of the Nigerian income? This is 2 million. Which one is higher between the two? Obviously, 29 million is higher than 2 million. You are going to pay the higher to government because they will not collect the lower. So it means that, therefore, company income tax payable for 2016 year of assessment in Nigeria is how much? 29,802,095, since it is higher than the minimum tax. But what about if the minimum tax is higher than this 29 million? As if the minimum tax happens to be 30 million. What will you pay to government now? You pay 30 million to government because it's higher than what? 29 million. But in this instance, the company income tax itself, which is 29 million, is higher than the minimum tax of the company of 2 million. So what does that mean? It signifies that what the amount of tax liability to the Nigerian government will now be the 29 million. That's the company income tax. I hope you are getting me now, that you are going to pay. So that is the second questions. Now, the third one is computation of tertiary education tax for 2016 assessments year. Now, that tertiary education tax should have been 2% of the profit before you remove the capital allowance. I get what I'm saying. That's how it is. But they said it's nil here. Let us see, why is it nil? Why is it nil? It should have been 2%. Why is it nil? Look at it. It said, according to the provision of Section 1, Subsection 2 of the Tertiary Education Trust Fund Establishment, etc., Act 2011, the company is not liable to tertiary education tax since it is a non-resident company. It is not a company that is resident in the country. It's what they established it in Ethiopia. I mean, in the other country. I get what I'm saying now. But it's operating worldwide. Therefore, the 2% will always be payable by the company that are resident, incorporated and registered in Nigeria. Again, I'm saying now, that's why the 2% will not be payable as education tax in Nigeria. So therefore, the tertiary education tax will be nil. Instead of you computing 2%, you just say it's nil. Look at it. The tertiary education tax is payable only by company registered in Nigeria. You know that the company they said at the initial stage that the company did not register the company in Nigeria. I hope you understand what I'm saying. So it means that it's only the company that is registered in Nigeria that will pay 2%, which is education tax. I hope you understand what I'm saying. That is how you do. So for the purpose of the exam, if the examiner decides to come from this area of the syllabus, what will you do? They can come from what? They can state the question in terms of airline. They can state it in terms of what? Cable. Cable network, the telecom. They can put it in terms of shipping. Just know that if it is cable, if it is telecom, you know that any calls from Nigeria to the outside Nigeria are Nigerian income. But any calls from outside Nigeria to Nigeria is not a Nigerian income. Any calls from outside Nigeria en route Nigeria to another country is not Nigerian income. It is only that calls that they originate from what? From Nigeria to outside Nigeria that will take as well as Nigerian income. That is one. Two, if it is shipping, any goods shipped from Nigeria to outside Nigeria, the income of it is Nigerian income. But any goods shipped from outside Nigeria to Nigeria is not a what? It's not a Nigerian income. And if it is an airline, the same thing. the same approach. I guess, but the procedure for the computation of tax liability is all the same. That is that for that. Please, why is the minimum tax 2% and not other method? The standard is 2% minimum tax. Please, the standard is 2% of the Nigerian income. Is not the standard 2% of Nigerian income is not in contention, please. Now the law states that 2% of the Nigerian income will be what will be. I hope you are getting me. 2% of Nigerian income will what to be the minimum tax. It means that what does that mean? It means that when you are paying tax, whatever you are paying tax in tax should not be less than what? Should not be less than 2% of money you make in our territory. I hope you get what I'm saying now. That's what it means indirectly. But if you are paying a tax that is less than 2% of the money you make from our territory, it's as if you are not paying anything as far as our law is concerned. That is the implications of this. I get it now. So you can still drop your questions. So because we are moving on to another topic. I will drop other past questions that they have set it. Please, someone should remind me tomorrow to drop it for you guys. If it is banking, where banking is not captured under the specialized income place, it's not captured there. Mr. Henry, banking is not captured there. The only thing that captured there are basically, I mean, in the materials we have. Please, let's restrict ourselves, please. Material, check your material. We are dealing specifically with what with insurance and airline, so that we can move. I guess it now. Yeah, they did not capture banking in your syllabus, please. So let's continue, please. Now, the next part of this, the next topic we are dealing with now is another topic is tax audit and investigations. Tax audits and investigations. Now, when we say tax audit and investigation, is also a major topic in your syllabus. It's a major topic in the syllabus. Tax audit and investigations. Now, let's start with the tax audit and investigation. What do you mean by tax audit? Let's start from there. What is tax audit? Now, part of the course you are doing in final is advanced audit. And when they say audit, that's just an independent examination of an account. I get what I'm saying. Independent what? Examination of what? Of account. It's straightforward. I will send that question group. I hope you're getting me. I'm telling you, you'll be able to solve it with this explanation right here. I will look for that diet. That particular one I explained. You will look at the way they run it. If you have questions on it, you can just put it on the group. So what I'm just doing here is, so as far as possible, as much as possible, to give you an idea that can make you pass the exam and to cover as much as we can. I hope you get that because we have limited time and your exam is very close. I hope I get what I'm saying now. So if I have to use my professional experience, I guess in teaching, so be able to highlight those things that you need to highlight. So it's now left for the student now to now sit back, listen to the lecture again over after they have sent it to you. Then you now use it to solve more questions. I guess if you now have a concern, then you can now send that concern via the WhatsApp group that will attend to it. I hope I get what I'm saying now. But as far as this is concerned, I know very well that at least you already have an idea, if you have not had it before, of how to tax a hairline. I get what I'm saying. But this particular question, I will send it to you guys on WhatsApp. I hope you get what I'm saying. Yes. Okay. Now, let's look at tax audits. For the tax audit, they brought it in 2 diets ago. They tested it 2 diets in this new syllabus. The first diet of this syllabus, they tested tax audit and investigations. I hope you get what I'm saying now. So let's unravel this. It happens to be a major topic in your syllabus. So when we say tax audit, what do we mean by? I was saying the other time. I said part of the courses you are doing now is advanced audit, the final. And when we say you are doing audit, it means that when you are auditing, you are independently examining the records. I get me now. The financial statement of an organization, so that you want to be sure whether that financial statement actually reflects what actually happened in the company for that particular period of reference. It simply means that when you're analyzing an account and looking into an account as prepared by an organization, and you want to see the correlation between that account prepared and the what, and that's what happened in that organization for that period. Then, and you want to now make your opinion, are you getting it on that, whether that account shows the true and fair position of what really happened or transpired in the company for that period. Then you say you are doing what? You are doing tax audit and invest. You are doing what? You are doing tax. You are doing auditing. You are auditing, right? But when we now say tax audit, this is now this is more of audit, but it is now relating to what? To tax. I hope I get what I'm saying now. You know very well that the FRS, I mean, the arms of government that are actually in charge of collecting revenue, the tax revenue, their own is to maximize the revenue or the proceeds of their revenue from the people. I get it now. So far, you know that their focus is to collect as much as they can. Then, at any point in time, when the taxpayer now is to pay their tax liability, they want to be sure that what you are paying in tax is actually reflective of what actually transpired in your organization for that period. I hope I get it now. So it means that if you if you want to know pay your tax as a taxpayer now, okay, please. Okay, you say please. Do you mean in computing minimum tax for non-residents? We use 2%. While other method for corporate, what we are saying in essence is that if the company, if they stated in the question that the company is a non-resident company, that means maybe registered in another country, right, but operates globally, it means that you will not compute the 2%. I get what I'm saying. The 2% will not be computed. I get it now. So, but if it is registered in Nigeria, I get what I'm saying now. It's a Nigerian company. 2% will be computed on it, on their income, and pay to what to Nigerian government as what as their education tax. Okay, you're talking about minimum tax here. Please, do you mean in computing minimum tax for non-residents, we use 2%, while other, no, don't confuse minimum tax with education tax. This minimum tax will be computed. I get what I'm saying now. Will surely be computed. I guess the minimum tax will be computed for foreign companies. I hope I get what I'm saying now. The minimum tax will be computed, please. See, what I was saying the other time was the education tax will not be computed. Education tax will not be computed for non-resident companies because they are not registered in Nigeria. I get it now. But minimum tax will be computed. I guess the 2% will be computed. Thank you. Hmm. Okay. Okay. It's as if Infinix Hot. Okay, yes. Yes, you remember, maybe you sat for that exam that diet, right? Okay, no problem. We'll look at this. We'll look at this, please. We'll look at it. Thank you. That the questions was on tax audit, was to prepare a report on tax audit, tax investigation, stages of investigation, practice, and so on. Yes, that was what they said. So let's continue, please. Now, for the tax audit, as I was saying, it's all about audit carried out by the tax authority. I get what I'm saying now. Look at it. Look at the definition they put in your material. They said, this is an audit exercise meant to enable the tax authority to further satisfy itself that audited financial statements and tax computations submitted by taxpayer agree with the underlying records. What is the focus of tax audit? If you as a taxpayer, you want to go and pay your tax, I hope you know the procedure of paying the tax. Now, after you have prepared your account, your audited account, they have determined the profit. The profit should be 30%. The tax will be 30% of that profit. You now compute your what? You compute your capital allowance. So you use it to determine your tax liability. That's self-assessment anyway. You determine your tax liability. After determining that tax liability, you raise a check. You raise a check. That check, you separate the check, the company income tax, separated from the education tax. You take it to the receiving bank of the FRS. You take it there. You pay the money in. You get the evidence. You take those evidence and the account and everything. You take it back to the office, FRS office scenarios that your account, your team or your record is domiciled. You take the evidence there. They collect the evidence of payment. They acknowledge it. They give you your own office copy and whatever. Your evidence of your submissions. Now, after you have done that, it means that you have self-assessed yourself to tax. Now it is now to now look deeply into your submissions. Though you have submitted, you have paid and so on, but they will now look into it and see whether the audited financial statements that you submitted to them and the tax computation that you also submitted, on the premise of which you pay money into bank and give them evidence, whether they are in alignment with the records they used to prepare them. There are different records, receipts, vouchers, and so on and so forth, which you're able to collate to prepare the financial statements and even prepare your capital allowance. It's possible that when I'm preparing it, I want to reduce my tax liability. Probably I lied at a point. Why those records are not in alignment with that financial statement. That financial statement is not showing what actually happened. So it is now the function of the tax authority to now look into that what you have submitted, that audited financial statement, and also look into into the tax you are computed, which was based on that capital allowance and so on you have submitted. They now want to see whether those things you submitted are in tune or are the same thing with the records that you used to prepare them. And you can say, if they are sure that okay, there hasn't been any mistake and the record they used to prepare them, then they are okay. They will not fault your tax payment. But if they now look into it and now realize that there are discrepancies in that account, what would they do? What are they doing in that instance? They are doing what they call tax audit. They're already auditing you. So what would they do? They'll call for you and ask you to bring other evidences to support your claims of that what you have submitted. I hope you're getting me. What they are doing in that instance is what we call a tax audit. I hope you're getting what I'm saying. So when we say tax audit, we mean this an audit exercise meant to enable the tax authority to further satisfy themselves that account or audited account are in tune or in alignment with the records they do. They will have to call for you to come and give them an evidence. I guess I'm saying now. So other evidences to submit. And if you can submit those evidences and are sure of it, no problem. But if you cannot provide those evidences, I hope you get what I'm saying now. Then that will be a source of reason why they will need to place additional assessment on you. If peradventure you are paid 1 million naira in tax based on what you have computed, it can now tell you that your tax liability is 5 million. I get what I'm saying now, because you're unable to bring that evidence that they require of you. I guess that is what we call tax audit. So it's always carried out, it's a routine thing. I get what I'm saying now. It's only carried out by the tax authority to look into what you have submitted, the audited financial statements, the tax computation, and they want to see whether it's aligned with the records that you used to prepare them. If it's not, and they are called for evidences, and you cannot give them, then definitely they are going to call for you. They are going to raise an additional assessment on you. I hope you're getting me now. So you want to see what are now the reasons or the objective of doing this. Let's look at it, please. What are the objectives? Why would the tax authority be interested in a kind of a tax audit on the taxpayer? Now, the first objective is what? To know whether the adequate accounting books and record exist for determining the taxable profit. Is it that you just computed your tax liability from the blues, or the profits you presented to them from the blues, no record for it? Like they want to be sure whether you have a record and that your profit you brought out maybe is actually in line with those records. I guess that's one reason why they do the tax audit. The second one is that applicable tax legislation has been complied with. Whether the relevant laws, CAMA and other relevant laws are complied with in the course of what? Of the preparation of account. You know, there are different laws that guide the preparation of account. If you have violated this, they want to know and how it affects the tax payment. All these are the reason why they do tax here. Audit. The third one is to discourage tax evasions. That's evasion in the sense that they want to discourage a taxpayer from not wanting to pay tax or paying lesser than what is required, and also to detect and correct any accounting errors. Now, people are bound to make errors. Accountants are bound to make errors. It's possible that you make an unintentional error sometime, and during their tax audit, they will pick it and they will correct it for you. They will align, they will relate with you, and that will be corrected. And also to identify whether there is a tax fraud. These are the reasons why your audited account and tax computations will have to be looked into and ensure that they are in line with the accounting records used in preparing them. Now, after knowing what are the objective of what of the tax audits, they will now want to see what are the two types of tax audits. We have the desk audit, we have the field audit. Now, the desk audit is the one they will do in their office. When you submit your your audited accounts and the tax computation, your capital allowance, and even the check, like the evidence of the checks paid straight to bank, if you submit to the tax authority, they will vet it, they will look at it and see whether that account relates to the accounting records. If they are doing it in their office there, they are what? They are doing what is desk audit. But if after they are done the test audit, they now ask you to bring some evidence that they will need to corroborate whatever you have submitted, and you're unable to provide it, that can make them to do elaborate audits. I hope you're getting me now. That will now lead them to doing what we call a field audit, in which they will come to your office to come and get those evidences directly from the officials of that company. I'll get answer. It simply means that the audit the tax authority will do in their office is the desk audit. Are you guys with me? Let me know if you guys are with me, please. Say aye, please. Just one or two of you. Are you guys with me? Just say aye. Okay. Thank you. Oh, thank you so much. Okay, it means that you guys. Oh, thank you, Victoria, and then Okeshuku, Koledoye, Rhoda, Oluwafemi. Thank you. It means that you are here. Okay. Now for the field audit, this is conducted at the taxpayer business premises. Field audit is conducted at the taxpayer premises. So it means that if you are unable to submit the relevant document to them as requested by them, they can go ahead and do field audits on you. I hope I get what I'm saying. And they will come to your office to come and carry out the audit. I get what I'm saying. I hope you know the reason why they are coming to your office. The reason why they are coming to your office is that they want to be sure of the records you're going to give them. You say you are not going to bring it to them, they will come to your office to come and collect it. I get something. That's why they do fixed audit, and it's more elaborate than the test audit. Now, if you look at it, what they will ask in the exam, if they are asking this time, should be more of what stages of this field audit. Now, I try to condense these stages here so that you can have it at once. I get me. You can have a view of it. I hope you're getting me. So if you check your pack, they listed those stages there. But I try to put it so that you can have a view of it. So in the exam, before the exam, you can just pick all these printouts. You can just look at it. You can get it at a glance. So let's look at the stages. The first stage of that field audit that are coming to your office is that they will first have to select the taxpayer to be audited. They're not just going to come, they have to what? Have their reason why they are coming. I hope I get what I'm saying. And they must have a cogent reason why they are choosing you. If a company is very unlucky, they will choose the company for what? For field audit. Because there is no way, mostly there is no way they will do field audit that they will not collect extra money from you. That's why companies always run away from them being picked. What for random was field audits. So they will the first stage of that field audit is to identify that company in which they want to go and do that field audit. And what are the criteria of identifying the company? For an unlucky company, the selection criteria will be that one, when the taxpayer is saying he's having a refund claim, you are telling the tax authority that they are owing you. You are a subject of what? Of a tax audit. Because ordinarily, they will not want to pay money out. So if you're now saying that you're having a refund from them, is a subject, there's one of the reasons why they can call for you, can come to your office. Taxpayer with new returns, you always tell them that they are making losses, or you don't even make profit at all. I guess I'm saying that you're always having very small profit or no profit at all the time. You are a subject of what? You are a subject of a tax. And also information from intelligence unit. They also have a hierarchy of FRS in such a way that there can be a verifier from any of these units that a particular company should be verified. And another one is what? Directive from higher government authority. There can be directive of higher government authority. Another one is that there can be lead information. There can be lead information from anonymous person from outside, and they will tell us that company needed to be visited. So that will be the first thing they will do. They will first select the taxpayer to be audited, and these are the criteria of the selection. After they have selected the company and they said, okay, company A, we are coming to meet them. What will they do? They will now go and do preliminary review of the selected taxpayer file. When they identify you, they don't just come to your office to come and do field audits. They have to what? Look into your details. I hope I get what I'm saying now. They have to look into your details, into your files. Your files is domiciled with them, because when you are registering for tax, what they will give you a team and the tax identification number. And that team will be a reference point for all your documents with them. I get it now. So they will go and pick up your file and start analyzing it. Now, note, they can analyze they will analyze your details in the sense that some of them will compute ratios on your profit over the years and see how you have been making profit if over time for the past 5 years you have been making profit and the profit have been going at 20% increase, and this particular year of reference now you now have a loss, they now ask, why are you having a loss? If for the past 5 years you have consistently declared profits, that's the power of ratios. They can do analytical review. I get what I'm saying now. They will look into the file and look at consistency, disparity over the years. Why are they doing this? They want to be armed. They want to be equipped with more information about you. I guess so that when they are coming to your organization, they will not be a novice. I guess in fact, they will need to know the line of business you are in. They will need to know the way you are operating, your competitors. All these things are preliminary review of your of the preliminary review of the file of the taxpayer file. The first stage of the tax audit is they will identify the taxpayer in which they want to go and audit. The second one is they will preliminary review the selected taxpayer file by doing analytical review. They are doing so many things to get information of that from that company. After they have now satisfied themselves that okay, we are coming and we have gotten more information about you, then they will now notify you. They can notify your representative, your tax consultant. They can notify the company directly. I get what I'm saying now. Notification of the taxpayer through a letter of notification. They will send a letter of notification to your consultant, that person that is representing you, or to the accountant of the company, or to the MD and to the company, to tell them that we are coming for a tax audit. And they will tell them, it also be stated there that the date they are coming, I guess now, and what they are coming to do. All this will be stated in that notification letter. The date, the time, those people that are coming, I guess how many of them, and so on and so forth, and where they are coming from. All this will be in the notification of taxpayer. It must be in a written form. So after they have notified them that they are coming, then what happens? That day that they want to go and visit, immediately they get there, they will do what they call pre-audit meeting. I hope you're getting it. Pre-audit meeting is the same that If they want to come and audit me in my company, you don't just batch in into my company, into my files and so on. No, you need to immediately get to my office. We need to first have a meeting. So it means that the task controller or the task consultant of that company must be at that meeting. The financial controller must be at that meeting, or the accountant. I get what I'm saying, or the MD and the MD, but accountant must be there. The task consultant must be there. I guess they will now have a meeting with the representative of what of the task authority that come for that field audit. Now, what would they be discussing at that pre-audit meeting? What they will be discussing is that they want to discuss the reason why they are there, and the fact that they are not coming there to return them, and the fact that the record that they will need them to provide them, they will need the company to provide for them for their work, and the need for them to have a cooperation from the work from the company in the course of their work, and whether there is a questions that they need to ask them before they commence the work. All this are what will be taken care of under the pre-audit meeting with the staffs of the organization before the audit work. After they have now finished that audit meeting and they've asked questions, everybody is satisfied, they will now move into the company, into the file of the company to do what they call the actual field audit. That's step stage 5. You now start doing the audits. Now, that audit now, they can ask for any the worker of the organization, they can ask questions, you can call for any files, can call for any documents, I get me, which they will need to carry out their activity. That's the actual field audit. After they have now certified themselves, they have finished the actual field audit, what will they do? They will now do another meeting. That meeting is what we call post-audit meeting. You know, we have in the step 4, we did pre-audit meeting before they now eventually go into what doing the audit. Now, the next one will now be the post-audit meeting. And this post-audit meeting, this should be held immediately after the end of the field audit. What's the reasons why they are doing the post-audit meeting again? Why are they having meeting with the company again after they have done the audit work? The reason being that there are some information they cannot get directly from the book. I get what I'm saying. Maybe their asset and location of their assets. If they say they have 10 assets, where are they located? Or if they say they are, any information that they think will be useful for them to do their audit, they will ask them. I get what I'm saying now. At that post-audit meeting, so that they can verbally tell them that themselves that if you look at it, it's like a field audit. So after that, they will now do what? They will now do what they call interim audit. So the tax authority, those tax consultants, those tax auditors will now go ahead to prepare interim audit report. That report will reflect all what happened or transpired during the audit work. I hope you're getting me now. After the interim audit report, what will they do? They will now do post-audit review by regional headquarters auditors. They will send the report to their headquarters, the tax authority headquarters. There's a way they have technical personnel that they look into the details of that report, and from there they will now make recommendations of whether there should be an additional assessment on the company, or whether how much the additional assessment, and so on and so forth. All these are what they will do under the post-audit review by the regional headquarters auditors. That's step 8. By stage 9 is what? They will now go ahead and do the reconciliation. Now, those people that are at this end here, this the headquarters, they will also join them in that reconciliation. Reconciliation in the sense that they need to now take up the company and tell them that these are our findings, and it shows that what we are going to we are going to levy additional tax on you, additional assessment on you, and so on and so forth. I get what I'm saying now. So that will now be debated and be agreed on. I get what I'm saying now. So if it's agreed on, they will have what? That's reconciliation meeting. The purpose is to what? Resolve all outstanding issues arising what? From the field tax audit exercise. Even from here, sometimes if they are not comfortable with that additional assessment, there can be a station where they will need to go to what? They need to go to court, high court, from high court to appeal court, and appeal court to Supreme Court. I get what I'm saying now. All these, the processes of what of tax appeal will take effect. I hope I get what I'm saying now. So after this reconciliation meeting, if they eventually reconcile, they will levy additional tax on them. They will ask them to go and pay. I guess I need to pay. They resolve this issue. And from there, the last one which I didn't put there is happened to be one, has to be final audit report. So it means that after everything, after they have reconciled and everything has been done, I hope I get what I'm saying now. They will now prepare a final audit report for reference purpose. I hope I get what I'm saying now. So all these are the stages in what in at the stages in what in tax audit. So in the exam, if the examiner now places it for you, I say stages in tax audit, you should be able to understand that those stages are in what are in 10, and that's more of when you have what when you have a field audit. You can have a desk and field audit. For that field audit, there can be 10 stages. I guess in those stages now you need to master them in case they ask you these ties. That is tax audit. Let us now go to tax investigations. Now, if you say tax investigations, what do you mean by tax investigations? Let's look at it. Tax investigation. Now, before you even look at tax investigation, when they say you are investigating your company, when they say there is an investigation, what does that mean? When they say there is an investigation in your company, sorry, I'm coming. When they say there is an investigation, what do you mean? It means that there is possibility of fraud in that company. I hope I get what I'm saying now. Which you need to what? You need to unravel. I get what I'm saying that, yeah, there is a violation of what of laws. Now, in tax audit now, in a tax audit and investigation, when they say tax investigation, look at it. From the word investigation, investigations are called for when there are problems in an organization. Sorry, I've been talking around there. Investigations are called for when there are problems in in an organization, either affecting the whole or particular segment of the organization. Such may be required when a large fraud is suspected. So most importantly, when there is a large fraud suspected, there was that's a fraud. Now, from the angle of tax, now, when we say a company have actually they are doing investigation on the company, what probably must have been the problem? Let me read this for you. Now, tax investigations aims to unearth fraud no matter how long. If the company have actually defrauded the water authority in the past, how do we unearth it? How do we discover it? How do we bring it to limelight? I guess in the course of doing that, they are doing tax investigation. Tax investigation aims to what? To unearth fraud, no matter how long, and to secure evidential materials. You want to discover fraud, no matter how long, and to what? To secure evidential material for possible prosecution of tax evasion or tax fraud. You want to unearth fraud and to get evidence to what? To prosecute that particular person or company. I guess if you are doing that, you are investigating. I want to unearth or discover fraud that are perpetrated in the past. I guess and after not only doing that, and also need to what? Secure evidence, evidential materials that can use to nail that company, so that what it will serve as a deterrent for others. Now, in the law court, the fraud could be due to what? Now, when we say that fraud, now what are those fraud that can necessitate investigation? I hope I get what I'm saying. Now, what are the fraud that must have been committed that can necessitate investigation? Now, the first one is failure to file a tax return. A company can decide to ignore filing a tax. If you don't file a tax return, you are defrauding the tax authority, and that you can be related to tax investigation. I guess me filing of incomplete and incorrect returns. You are fond of filing of incomplete returns because you want to pay down your tax liabilities. It's also very critical. And also failure to register for tax purposes, and also delay in filing for tax. You always delay. You're supposed to file for tax last year, you did not file it. 2 years ago, you did not file it. You are delaying. You always delay 6 months or 1. That's what is they need to investigate you. And also delay in tax payments. Not filing enough. When you delay in payment of tax, you are a subject of investigations. I hope I get what I'm saying now. So you can see the meaning of investigation now is when you want to unearth fraud, tax evasions, and also secure evidential materials for the purpose of prosecuting that company. Then you say you are doing investigations. Again, I'm saying now. So and I gave you those reasons why they can investigate a company. Now look at it. If you are doing investigation, there can now be there are stages of investigation. The stages are what I put here. Now, the stages are similar to that of what tax audit, but they have a little differences, right? Now let's look at that stages of what of investigation. Now the first thing is what pre-investigation activity. Now that pre-investigation activity is that you don't call someone the thief if you are not sure of it. You are saying a company is a thief or they have what defrauded us and you're not sure, you don't have evidence, you can lose money in the process. You can get yourself your hand burnt. Yeah, that we want to be sure that this person actually defrauded us. That's when we have pre-investigation activities. You need to gather information about the company. What are they into? What are the evidences? What are those things that they have done that has defrauded us, and so on and so forth. All these will be gathered, but we want to be sure of that company. What are they even into? What is the year they normally prepare their account? And after preparing the account, are they normal? When last they prepare? They submit their account. When last they pay money, and so on and so forth. All these are background informations. We want to look at the projection of their profits, and so on and so forth. So all these are pre-investigation activities. Now, after you have done your investigation, then you now notify them. The way you notify that audit, notify the taxpayer that you are coming, and you need to tell them. Okay, you ask what are the reasons for investigations? Okay, that is Adrian AJ. Now, the reason for investigation can be when you are what when you always delay in payment of tax. You're supposed to pay tax a particular date, but you you always deliberately delay. You will not pay it. 2 years tax you did not pay. You know what I'm saying? That's a source for what they can investigate you. When you fail to file your tax return, you did not file it. You refuse to file your tax returns. Mhm. When you fail to register for tax purpose, you're supposed to register for VAT. You refuse, so that they will not take you up on it. You are also subject of what investigation. When you delay in filing your tax, also you're also subject of investigation. You delay in filing tax. When you delay in tax payment, and when you file incomplete and inaccurate returns. When you file incomplete and inaccurate returns, these are examples of the reason why they can investigate you. I hope I get what I'm saying. And I said, if they are investigating you, they will need to carry out investigation activities on you. They will need to notify you. Notification in the sense that tell you that they are coming and the reason of their coming. That is not for audit, it's for also interest. Investigation. The focus of investigation is that we want to go to court. We want to prosecute you. Okay, okay, you're welcome, AJ. Now, the reason being that we want to prosecute you, that you are defrauding government. That's the essence of investigation. But for the tax audit, we just want to be sure that the underlying records you use in preparing the account are in line with the account itself. That's that. But this investigation, we are taking into court on this because you are defrauding us. That's investigation. And it can even back, you can what, as far as 6 years, 5, 4, 3, 4, and even more than 6 years, they can do investigation. So far, they are sure that you are defrauded them over time. How to get chances. So either they notify the taxpayer. What's the next thing they will do? They will do pre-investigation meeting. When they get to your office, they will investigate. They will do a meeting with you. They will tell you the reason why they are in your place. I guess I'm saying that, and they will let you know that so far they are here now. This is what they want to do, and so on and so forth. So after the meeting, what do? They will now quickly move in. In your company, start seizing document. They can seize document. They can seal up. They can what? They can even use tax. They are investigators. They always go with police or security personnel. I guess now they can seize documents. They can seal up your company. They can take up anybody and what I'm taking them to the police station. And they can, because anything that they think is important for them to secure evidence in your company, I guess I'm saying that will use to nail you as a default, as a tax defaulter. I hope I get to say that what they will do. But can you now see this is more elaborate than what tax audit? But in this one now, when they are doing that audit, they are ready to do what is needful under the law to ensure that they secure evidences that they will use to nail you. I get some. So evidential audit was always elaborate. They always come with what with police and so on and so forth, security agencies to want to carry it out. After they have now secured those evidences, I get what I'm saying now. Then what they do? They will now make a case against you. That's when they will now start compiling those evidences. They compile the evidences together. What they are making a case against you. Now after that, they will do what? They will arraign the person in court. I guess they will arraign them in court. Now, in the course of arraigning them in court, I guess if they realize that one, the taxpayer is maybe they realize that there is no criminal tendencies in that investigations, they can let go, they can terminate that investigation. If they realize that what that taxpayer is not criminally minded, I get what I'm saying now. That's one. Two, if they realize that they don't have sufficient evidence, I get me, they can terminate that agreement. I get it. And even if the taxpayer is mentally sick during that period, or is that eventually dies in the process, they can terminate that tax audit, tax investigation. And also look at it, after these are the reasons why they can terminate it. Then that's the reason why they can terminate it. But else, if not, they will arraign the court and they will get justice. They will deal with the person. They will get their whatever they want to get from you in terms of what you have defrauded them, and the person can even go to jail for that purpose. I hope I get what I'm saying now. So these are the stages in what in tax investigations. I hope you understand it now. So if in the exam, the examiner is now coming from this topic, immediately they talk about tax audit. No, that 10 stages. I hope you get it. And you should know tax audit can be divided into what? Tax field audit and what and the desk audit. Desk audit is what they do in the office, and if you are able to submit what is needful, they can come to the office to do elaborate field audits. And there are stages to that for field audit, which I gave you. But investigation is when you are defrauding government, you are evading tax. I guess what I'm saying now. And they are able to pick you. So how do they unravel that fraud? And also how do they secure evidences to nail what to execute, to prosecute the case in court so that they can get justice. They are doing that, they are doing tax investigation. And I told you, there are different reasons why you can have tax investigations. Some of the reasons are when you don't pay tax as a when due, when you do file tax returns, and so on and so forth. I guess. So aside that, there are other little things they put in your pack. You can look at it. So I know you can look back into your pack and look at what they are doing there. I hope I get it. So let's look at it. List of requirements for documents. Look at required documents for tax audit and investigation. If they are coming to do tax audit in your office, what are the requirements? Those are the requirements by FRS, audited account for if this FRS is not it's a Federal Revenue Service, you will need the audited account, you need your management account, the chart of account, the year-end final trial balance, general ledger, audit adjustment voucher. While if they are looking at if it's State Inland Revenue Service, audited financial statement, general ledger or trial balance, staff list, designation, like their staff list, payroll of local staff and expatriate, schedule of company vehicle and designator, payment, voucher for the period. Just know some of these documents that they require of if they are coming for tax audit and investigations. I hope you get what I'm saying now. So that is that for tax audit and investigation. So the next thing is to now look at what are the illustrations now. And what's the illustration now? It's a past question now. Yasar Limited import baby wears. Yasar Limited import baby wears and has been in business for some years now. The company is doing very well and the directors are impressed with the growth. The company's managing director, Chief Agbagonkiti, is a member of Enugu Sport Club. On January 14, 2015, after the morning aerobics in the club's gym, a friend of Chief Agbagonkiti, who is also the finance director of a trading outfit, narrated how the company he works for was subjected to a tax audit by the Federal Inland Revenue Service. So that person was actually narrating the ordeal, the tax audit, the tax FRS, which resulted in payment of additional tax liability totaling 10.5 million. So that friend of his was telling them the additional assessments made on him based on what? Additional assessments. Now, the finance director attributed their company's ordeal to the board's poor understanding of key tax-related issues because they are not clear about tax-related issues. That's why there are ordeals. Now, they now say Chief Agbai Gonkiti, after listening to his friends, was highly worried about such fate befalling his company. As a proactive move, he inquired for seasoned tax practitioner and your firm, Cutting Edge and Co. Chartered Accountant, was referred to him. He now ask you, if you are the member of that Cutting Edge and Co. Chartered Accountant and you are the one that is in charge of that work, what will you have? The answer as the managing partner, as when you are the managing partner, you are to make a presentation, that is a presentation, to address the following. Now, if you are making a presentation there, you need to what? You need to present, you need to talk as if you are making a real presentation. I guess I'm saying that. Look at the content of your presentation. You have to what? Briefly explain what you understand by the term tax evasions and tax avoidance. That's the first thing. Now, the next one is what? You need to state 5 differences between what? State 5 differences between tax avoidance and tax evasions and outline the key stages in tax audit process. Sorry? What are the key stages in tax audit process? And state 6 objectives of a tax audit exercise. Happen to be 20 marks. Now, the first thing is explain what is the difference between avoidance and tax evasion. I guess what I'm saying now. Tax avoidance and tax evasions are coming. Now, if I were to be in the exam, this presentation, maybe the next class I will take questions based on what Mr. Musa or I don't know the name again now. I said I should present. I guess I'm saying okay, I will try to present quickly by next class. Like God's grace, I guess me present the ways when you present, I guess me now. So if I were to be in this exam, I will have to use information of this company. Our shadow accountant is Cutting Edge. So my logo or my letterhead will have what? A Cutting Edge and Co on top, and what I'm referring towards. So if they say I'm a managing partner, you have to make a presentation to address the following. Well, if you look at it, they said Chief Abankwiti, after listening to his friend, was highly worried about such fate befalling his company as a proactive move. He inquired for season tax and it was so I'll need to go and look at Abankwiti, the company. What's the name of the company? I guess Yasau Limited Import Baby. I can say the managing director. I get him in Yasau Limited Import Baby Company. I get him. I can put a number, a date, and so on. So my letterhead, I put on top Chartered Accountant, Cutting Edge Chartered Accountant. Then to the managing director, Yasau Limited number so I put it there. I said presentation of what of this of presentations of information relating to tax audits, tax investigation, and tax avoidance and tax evasions. I guess similar. So I'll come up with something by next class so that will be more similar. But this one they just put it directly at the solution. But it should be a presentation because what failed, pay attention to the details. In fact, whatever the question they give you in the exam, note it. In this exam you want to go into, present everything in form of advice. Either they ask you or they don't ask you. Put it there. They say you should compute after you finish your computation of PPT. Now look for the company name. Put it there. Write it there. Put everything. Put it there for them. I get what I'm saying now. So that we don't know why they are failing students. We don't know. We're not sure. But we're not seeing the paper. Some of this, like the last exam was cheap and we don't know what really happened. some students. Though some students passed, but the rate of pass are not really encouraging. But some our student passed fine, but we can do better. Again, I'm saying that. So, but for all the people on this platform today, so we want you guys to pass. So let's look at the tax avoidance and tax evasion. When we say tax avoidance, I mean it refers to a situation. This again, when you are writing the exam, you need to study the marks allocated for those questions. I get in it. Whether you can take reasonable portion of that mark out. I get in it. So if you know you can't, then you know you have other question you can attend to, like get more. You now have to go to that one instead of you wasting your time on the one that you will not get more mark on. Because some students will just go in and start writing. They will not pay attention. Listen to those marks. I get me. The marks are very sick, are very sacrosanct. I get what I'm saying now. If they give me a question and I say A and B on that question, A is 10 marks, B is 55 marks. I know that A 10 marks and the 5 marks I do not know. Is it not better for me to do that one than going to another question in which they split it into 3, 3, 3, 3? I get what I'm saying now. So what is probability that each of the question 3, 3, 3 we are able to solve it very well? If I know that 10 marks very well, I do it very well, even if I don't know the 5, than going to do the one that sectionalized the 3, 3. I'm already working on how to pass. But you need intelligence also to pass this exam. Because it's not easy sitting for this exam. So let's look at it. The tax avoidance refers to a situation where the taxpayer arranges his or her financial affairs in such a way as to make him or her to pay the least possible tax. When you say you're avoiding tax, that is a legal procedure that taxpayer normally explore. They explore the loopholes of tax authority for the purpose of what of reducing their tax liability. You know, when you are a tax guru or tax expert, you are now looking at the flaws or the loopholes of the tax authority regarding their laws and try to manipulate or explore that loopholes to your own advantage. I guess me to your own advantage. If you are not exploring the loopholes to your own advantage, then what do? We say you are what? We say you are what? You are doing tax avoidance. Please note, when you are doing tax avoidance, there is a limitation to it. If the tax avoidance is what is carried to the extreme, the tax authority are having the prerogative or the right in law to disregard it. If you are entering into what? Into a transaction for the sole purpose of what? Of avoiding or tax avoidance. Not because of anything. You are entering because of tax avoidance, they can disregard it if it's on the extreme. But tax evasion is the act whereby a taxpayer takes steps to minimize your tax liability through illegal means. If you are illegally reducing your tax liability, you say you are doing evasion. Okay, evasion is what? Is a contravention of laws. You want to reduce your tax liability, you are contravening laws. That's evasion. But avoidance is when you are exploring loopholes of what? Of tax laws for the purpose of reducing your tax liability. That's when you say you are what? You are doing tax avoidance. So between the two, avoidance is allowed while evasion is what is criminal. Hope you get what I'm saying now. So that you should know. Aside that explanation of that, you now say what are the differences between the tax avoidance and tax evasion? This question is always a current question. It's set it recently also. Now, when we say tax avoidance, look at it. Tax avoidance and tax evasion, one is legal and illegal. Hope you know tax avoidance is legal, evasion is illegal. It is achieved through the exploitation of loopholes in the tax law. It means that tax avoidance is achieved through exploring the loopholes, while the tax evasion is achieved through what? Fraudulent acts. Contravention of laws. Now, the third one is result in taxpayer paying minimum tax possible without breaking the law. That's tax avoidance. You are paying minimum tax possible without breaking the law. Why it results for evasion, it results in taxpayer paying incorrect tax or paying tax through illegal means. Hope you are getting me now. Why the next one, number 4, tax avoidance is supported by what? By law courts in decided cases. In the past, they have actually carried out tax avoidance and the courts allowed it. But there hasn't been any case, any situation where the law courts will allow or support evasion of tax, because it's criminal. Now for 5, avoidance is what? There is no criminal liability as far as avoidance is concerned. For evasion, tax evader is criminally liable. These are the differences between tax evasion and tax avoidance. Also, if stretch, okay, look at the avoidance I was taking it the other time. The point I was raising. He said, if the tax avoidance is stretched to the extreme, if you enter tax a transaction for the purpose of reducing tax for kind of tax avoidance, if you stretch it to the extreme, what happens? The scheme could be disregarded by the tax authority. The scheme could be what? Disregarded by the what? By the tax authority. It means that if you stretch it too much, they will disregard, but at any level, they will disregard evasion. Either you stretch it to, don't stretch it to, you don't even allow it. Now, the seventh one is what? No revenue service investigation and prior years assessment will not be. No revenue service investigation, no investigation on tax avoidance, and they will not go and reopen your tax avoidance issue in the past. But in evasion, they can what? They can do it. They can go and reopen your account, like the one we are talking about under tax fraud, tax investigation. They can reopen your account, registration, even more than 6 years. Getting of that back to assessment, they can do it more than they can do it after 10 years. I mean, what happened in 10 years, they can go and reopen it and still deal with you accordingly. Now, what are the stages in tax audit process? That's the stages I listed the other time. The stages are selection of taxpayer to be audited, preliminary review of the taxpayer's file, notification of taxpayer, pre-audit meeting, field work, post-audit meeting, interim audit report, post-audit review, reconciliation, final audit report, and payment of tax or appeal against assessment. So all these stages now, based on the explanation I gave and what you see in your pack, I get what I'm saying now. Please look at those stages and write on them. I hope you're getting that. It's very important. Now ask, what are the objectives of tax audit exercise? Now, the objective of tax audit exercise are to enable tax auditors determine whether or not, one, whether adequate accounting books or record exist for the purpose of determining taxable profit or loss. Whether you have adequate book on record to determine the tax liability of the company. Two, the tax computation submitted to the tax authority and the taxpayer agree with the underlying records. Whether the tax you are submitted, use that you are doing self-assessment, whether the tax are submitted align with the what, with the records of the company. That's another reason why you do that as of the exercise. Three, all applicable tax laws are complied with. You want to know whether all applicable tax laws are what are not violated. That's another reason why you do tax audit. Four, discourage tax evasions. To discourage people from evading tax, from criminally minded, again, for not wanting to pay tax deliberately. These are reasons why to tax audits. And also to detect and correct accounting errors. I highlighted in my chart to the work, detect and correct accounting. Can you see that chart is very good because it encompasses all this solution now. This is a past question. It was a past question in the words 2016 or 17. Yeah, and they asked it. That particular chart I used. I mean, it's very encompassing. So you can use for the board exam. The last thing you should be looking at the chart, so you can see all the topics at a glance in the last 30 minutes to the exam. Just bring all the chart out, start looking at it one by one. It will quickly recap all the details of those things, and you get in. If you see it, you see that at once you'll be able to attempt the questions. I guess and also provide feedback to the management of various provisions of law and recommend possible changes. That is that. So the next thing is merger and acquisitions. Merger and acquisition. They brought that also recently in 2 days ago. Merger and acquisition. But because of the time, it's 2 minutes to 8. Out of 20 something topic done, I think my colleague started with one with 2 years today. That specialized business remain insurance. I've done airline there, but remain insurance. But at least tax audit and investigations is what I've discussed now. And for the person that said I should try to look at how to write that report or so on tax audit and investigation. The last 2 diets, I'll try to post it on by next class by God's grace. I guess so that I can discuss 1 or 2 things before I move to the next thing. Okay? Because save our life. Now I hope I pray by God's grace that if you have questions, you can drop it. I will attend to it on WhatsApp. Thank you. I pray by God's grace that this exam will not be repeated. Please take note. Advanced taxation has been a concern recently. I mean, the ICANN has actually been using it to deal with students. So if you know that it has been a concern recently, it's very important for you to pay a very closer look at it. Don't just restrict yourself to computations. I always tell them in class, computation is not the only part of the what of the part. I can advance tax. Go and check it. 45% of the syllabus happen to be theoretical. What of if you get to the exam in your PPT and they ask you to start writing story? How do you do? Majority of you already know what is API, what is a load factor, and so on. But the theory is very critical. All the topics there, they are theoretical backing stories. You have to read it. Thank you for listening. I thank you all. I wish you all the best. You can send any questions via the WhatsApp. Have a good night rest, please. Thank you.